Hello traders and welcome to another video review. Today is Tuesday, April 7, 2026. Let's take a look at the economic calendar for today. So what do we have in the calendar for today? Asian session was not very rich in data release. Household spending in Japan down from -1% to -1.8. So the bad data from the Japan. We are waiting for the bunch of the services PMI data releases from across the Eurozone, from Spain, Italy, France and Germany. At the end we will have the Eurozone composite PMI and services PMI data from the Eurozone scheduled for release at 10 o'clock. The market participants expect the composite and PMI data to deteriorate, as you can see in both of these situations. 30 minutes later, we got the composite PMI and services PMI data scheduled for release at 10:30 from the UK. At 2 o'clock, we got the global daily trade price index from New Zealand. And then we enter the US session. Initial jobless claims and core durable good orders are scheduled for release at 2:30. IV PMI from Canada is scheduled for release at 4 o'clock. At the same time, we got Atlanta Fed GDP now data release. At 6 o'clock, we got short-term energy outlook from the US, and 1 hour later, at 7 o'clock, we got 3-year note auction. At the end of the day, API weekly crude oil stock data are scheduled for release at 10:30. So that's about the situation during the Tuesday. So without any further ado, let's switch to the charts and we start with euro dollar. So the euro dollar, as you can see on the 4-hour time frame chart, is sitting quietly around the 100 periods moving average, now at 1.1536, just above the trend line. Nevertheless, it doesn't actually look like this trend line is being respected that much by the market participants. Maybe it is fully priced in. Nevertheless, we will still have it on the chart, because if we take a look from the bigger perspective, we can see that 5 wave in the downside swing here, that downside cycle might have been completed, and this might be just the beginning of the some sort of another leg to the downside after the correction is obviously completed. So this is our current scenario based on the Elliott wave theory. To the upside, internal range is 1.1572 as the technical resistance, 1.1506 technical support. Then in case of a breakout to the downside, we got support at 1.1469, 1.1444, and obviously the major technical support located at the swing low from the March 13 at 1.1412. To the upside, we need a breakout above 1.1630, 1.1638 to move higher. Similar situation can be observed on the cable. Cable sits below the 100 periods moving average, currently at 1.3299. A little bit to the upside, a little bit to the downside. We got, nevertheless, that's not the major observation here. In our scenario, we got this trend line that separates the bullish market from the bearish market so far since the swing high at 1.3844 made on January 28. The outlook still remains bearish, as the market sits below the 100 periods moving average, below the trend line. So currently local technical support levels are being tested. If we break below last week low 1.3158, the downside pressure might even intensify. To the upside, we need at least a breakout above 1.3345. Cable done. US dollar versus the Japanese yen, right now trading just below the 160 level, local high 159.94, so not that far away from the swing high at 1.60.46. We are trading above the 100 periods moving average, and was quite far away from the demand zone established between the levels of 157.97 and 157.35. The strongest momentum so far, 60 points on all of these markets, so it looks like the market might want to test the swing high on the US dollar versus the Japanese yen. The gold market sits at the trend line. As you can see, this trend line is preventing the gold to move higher, to test 4,800 at least on the first go. Nevertheless, the technical support at 4,600 is still valid, and it still provides some sort of the support from the technical point of view. So any breakout below this level might be slightly bearish. Any breakout above 4,800 might put 4,843, the technical resistance, to the test. Momentum 48, almost 49 points, so barely negative, almost neutral. Not much is going on right now on gold as we wait for another leg to the upside or to the downside. SP500 moves quite nicely to the upside. Let me just take a look how much did we moved to the upside, moved higher. Let me say maybe this one. Yes, 4.88% since the last week low. So that's not bad at all. We are sitting above the 100 periods moving average at 6,565. So 65, and only breakout below this level would open the road towards one of the technical support. For example, the nearest one is at 6,462. On the other hand, any prolonged movement to the upside might even end up with a test of the supply zone located between 6,728 6,710, as the RSI remains on the level of 56 points. So that's quite strong. The other story is about the crude oil keeps moving higher, and we are very close to test the swing high from the last month, 119.42. Local high was made at 116.54 into the extremely overbought conditions, and the level of 106.02 will still act as the technical support for the crude oil. We are far away from the 100 periods moving average, so the outlook still remains bullish, and it looks like the bulls want to test the swing high from the last month. Bitcoin has been seen moving to the downside towards 100 periods moving average, currently at 68,179. So this trend line here yet again proved that it is correct, and the market sees this trend line and respects the trend line. We tried to break here at the beginning of the April. It was obviously capped. The movement to the upside was capped, and the market went back down to the range, and then another attempt, a little bit better, but next attempt was unsuccessful as well. This attempt ended up at the level of, let's say, 70,351, just where the trend line is. So as you can see, the market reacts on the trend line, and these days, let me just move this arrow here. So these days, any breakout above the trend line, it will be considered bullish. Please notice we're coming off the extremely overbought conditions right now at the level of 56 points, so we might see deeper penetration of the area below 68,000 towards 67,310, and maybe even 66,251. So the outlook for the Bitcoin remains a little bit skewed to the downside as we're coming off the extremely overbought conditions on the 4-hour time frame chart right now, and the upside is being still limited by the technical line, which is the, as you can see, orange trend line on my chart. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.